exports unchanged, imports contracting.
Alrighty, good morning. Did you guys hear me in YouTube land? Type something in the chat if you can hear me. I appreciate it. Did you guys hear me in YouTube land? Type something in the chat if you can hear me. I appreciate it. Did you guys hear me in YouTube land? Type something in the chat if you can hear me. I appreciate it. Did you guys hear me in YouTube land? Type something in the chat if you can hear me.
Soybean iceberg sells ES 150 for contracts.
I think I'm good at Discord. Could anyone hear me on YouTube? Please let me know.
In the US, a 3-day bill here, just drawing at 6.15%. A lot of highs at
Nobody's on YouTube
14.29%.
that can type yes. Anyone? Bueller. I guess I'll ask my room since nobody's responding. Okay, one person. Appreciate all the help, guys. All right, good morning. Let's do this quick disclaimer, and I'll be back in 90 seconds here.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in Wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all, of which can adversely affect actual trading results.
Again, this is the US.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade within it for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. Alright, so number just came out here in equities. I'm actually short natural gas. I missed this volume event. I need to trail my stop to this. I'm costing myself money right now. Hold on a second. So we'll go over this short here in a second, but this is the newest volume event that just came in. You had 184 buy ice threshold in natural gas is 150 that I will threshold, meaning these are the values, the amounts that I'll trade off of. Anything less than that, I don't trade it. It's not meaningful from my studies, experience, watching about 4 million of these things. All right, so that's zone 62 to 60. We'll go over all what I'm doing here in a second. I just got to get this in, make sure I don't miss this exit. ATR is the same, so if I was to short this setup, my stop goes at 74, which I think is where we're at here. Yes. All right, so I'm going to get out of this short. I'll go over what I did here in a little bit. All right. Get this back up. And if this guy, I turned on my internal volume, but if this is overbearing, talking, let me know. Because there's something with this, like I'd say at every webinar, there's something with this YouTube broadcasting that picks up my internal volume, so it doesn't matter what I do with my speaker on my desk, it picks up like full blast. So if it's annoying, let me know. All right, let's just see where we are in the old equities here. All right, so quickly I put in here, finally, this is my info here, websites, Pulcini.com. This is where you can find all everything that I use. There's discounts on my website. That's here. Just go to these banners. Bookmap, Apex, we'll cover that later. Spot Gamma, Hero, get an extra week. Tick Strike, and Trader Sync. That's what I use for my journaling. So that's that. Emails, Twitter, Apex Trader Funding. We'll go over this. The code for any available discounts, doesn't matter what they come out with. They've just extended their sale. I know that's shocker. It's a good thing, but they always put these deadlines, and then the day of the deadline they extend it. Pulcini 50 is good for any sale that they have, whatever percentage. And then Ludwig levels we'll talk about, which we call the lugs, so I don't have to say Ludwig levels 85 times. That's that website. And again, just because I always forget to go over this stuff, it's their website. Put your name in here if you want the 3-day trial. You can try them out. Say you saw it in the Bookmap webinar and you get special pricing. All right. So I'll cover natural gas a little bit. So there is a current possible setup here in Q. There was some sell ice here. This was before the number, and then the number came out. Nothing really happened. You did have a stopper in here as well. Let me turn off this market pulse. We'll go over market pulse as well. It's seeing some really incredible things with that. So this was threshold as well. So I'm going to draw this zone, but I can trade off this original sell ice zone. So what I've been waiting for, I put in these values. It looks like actually this has already happened. Hold on. So we have, I have distinct rules that I use to trade these zones, and then different trading strategies to trade them. So the BARF is just blind ATR retest fail. That's always in play. So it's literally just to show what I'm trying to show my room here is that and you guys is the edge is inherent in these volume events, right? So the market responds to volume events. This is what drives markets, not lines on a chart, to what happens in the actual real-time volume, right? So I'm trying to show my room. I've done it before, and it'll prove right again that this is the edge, right? So how the market reacts to this, and from watching so many of these, I know the distinct patterns that happens with these things to understand if they're bullish, bearish, so on and so forth. If I want to get in aggressively versus the conservative entry. So for this trade, I'm waiting for the conservative entry retest failure. So I think I actually would have already been long this. We're going to check, but if it comes back up, I will definitely put on the long. Just make sure this is, 2.37. So the other very important thing in trading, if you're not using this, you're not getting all the information. ATR, this is telling you the current volatility, average true range. I use just the default 5-minute ATR on Thinkorswim. You can get this on basically any software. It's a 14 period Wilders. You can see there in the middle of the screen there. You can Google what all this is, just 14, looking back 14 periods and the volatility for 14 periods. It's very, very helpful in understanding risk and how volatile the market is. All right, so this was the zone. I put in the zone prices. This is a spreadsheet that's proprietary to my trade room. If you're in my trade room, you get access to this. Godsend. Just before I used to do everything by hand and by eyeing it and just estimating the areas. Now we put the zones in, put the ATR in, and it spits out all these values of where we would get long. So for this to be a bullish setup, this market needed to touch, and that's this ATR validation price, 14,328.75. So that definitely got up to there, right? That actually got here this first time. So I should already be long this, like I said. So you had the volume event, then you had this move up. Here's your retest. This is, we have an actual trade for this move too. It's called the reversion trade because this happens so ridiculously. It's just ridiculous how often it happens. So we actually trade for this move. It's just a quick scalp where you get in at one ATR, two ATRs, sometimes three. Different markets have different ATRs that they usually go to and retest failure. So let me actually put this on before I'm missing this trade. So I need to be long at 32. I can put on 10. I'm going to round up 10 ES. That's basically right now. So give me a second. Let me put this on. I think I said ES, 10 MNQ, not ES. All right, so that's working. So if this comes back up to that price, I will be long. Like I said, I should have already been long. Then what happened after that? So I'm trading off this original event. Then we had another event come in right after that. Stop runs right before the number. So what I can do here, I can still fill all my original prices that I put in, but now I will draw this new zone and I can actually trail my stop off this new event. So all I'm doing here is cover this every week, but there's always new trades on there. So you want to get this last price line on your chart. This one is easier because this is also the sweeps indicator. You can see these sweeps, which are the buy stops. So I'll show you another way. We'll draw the zone in another instance, but this because I want to get this drawn quickly. So this was a stop run. I use different colors for the volume events. So stops, I use yellow or white. So color that up just so I can look at the chart and know exactly what was going on. In case I lose track of it. Alright, so that's now that, so you can see the spike and the indicator that incorporated those prices in the spike, so that's an accurate zone. So now I'm going to put this zone price in, these prices, 14,323.50 to down in 1975. So now watch what I do here. 14,323.50. So I'm already getting long off that first zone at 32. Now this is obviously going to change, but I'm going to now trail my stop. Actually, let's just look at this quickly. So if I were to get long off that original setup, which I'm going to, my stop would have been at 78, 14,278. Now with this new zone, 2350 down now, what did I say, 1975. Now I can move my stop up to 9625 if I fill. As long as this market doesn't get, as long as this new setup doesn't turn into a bearish setup. How do I determine that? Well, if it gets down to the validation price, and this is basically just an ATR below the zone. That's how I determine if a setup is bullish or bearish. So as long as this doesn't get this white zone doesn't get down to 99.50, I can still go along this original setup, and then I'm going to trail my stop. So remember, I'm going long. I should already be long, but if it comes back, I'm going to fill, which is about to happen right now. And then I'm going to trail my stop to this newest setup. So instead of having my stop and ATR below this volume event, I can now trail to this. And this is how you catch trending trades. And then, on top of that, I can still trade this event as well. So I just filled on long on that. So let me put my stop in before I forget, because that happens about 5 times a day. Long, sorry. So 96 quarter. Put that in now. right, so that's working. So now for this new zone, what do I need to see to make this a bullish setup for this volume event? I need to see 43.75. So if this market gets up to 43.75, I can do the same exact trade off this new event as I did on the original event. And if it does spike down, actually I should have a liquidity trade on here too. Hold on a second. Yeah, that's close enough. So we have distinct trades in my, obviously I just showed you the bar trade.
S&P Iceberg Sell ES 756 contracts.
I should be long the lick trade too because there is liquidity up here. We have a distinct pattern. You guys hear me talk about it every webinar. This is not resistance. This is not people that you should be like, oh, well, there's a lot of sellers up here. These are areas where the market will travel to eventually just because this is the bigger money, and the bigger money forces the market into their orders. I know that for a fact because that's what I used to do as a scalper. All day, every day. Just play the games. Whipsawing traders and making them, and then wait till it gets close to my liquidity. So like I always give you guys an example. I would put like, this is in the ES. I put like 1,000 here.
So looking now to the
and then the market would be screwing around doing nothing, and then I would start buying some. I'd dip my toe in the water to see if there's anybody willing to sell against me. There wasn't. Then I would just start buying a flurry of them. Everyone would jump on my coattails, and I would run right into my offer, waiting for my, and then I'd be out of the trade. So I'd make, five. I mean, this was back in when the ES would move 3 points in a day, basically. But I would make 2-3 points on 1,000. Right, that adds up if you do it 20 times a day. So that was the game, and it's still the game. If you understand the game, it makes life a lot easier as a trader on knowing what to expect. All right, so that's just chopping around. If it comes back up there, I'll put on a liquidity trade too, towards that liquidity, same price. That was at, what did I say, 30 quarter. I think I traded too big here. Hold on a second. Oh, I got 9 on. ATR is spiking up a little bit. All right, so that's working. If it comes back to 90, 95, I'm out of the trade. Stop out. All right, let's see what's going on in ES here. Since everybody loves to trade the ES, I'm not sure why. It's the most rotational, annoying market probably out there. You're doing yourself a disservice if you're not looking at other markets, which we will cover today. So we had, so this is pretty significant, right? 1,500 sell eyes. So guys, this is the stuff that you don't see staring at bar charts or whatever chart you're looking at. You're not getting all the information. It's pretty important to know that big money just came in here and is trying to hold this market down with 1,500 contracts, right? Like that has an effect on price. It's the effect on price. So real-time volume, that is. Let's just see if this is accurate, and we'll put our zones in, and we'll trade this the exact same way. We'll look at the bigger picture here too to figure out the areas to see what different trading strategies that we have in my room. Again, we got about 6 or 7 of them. It's actually probably 8. And if the parameters fit, we put the trade on.
10 minutes time now.
There's
we
no
do
question
get
marks,
the
and
natural gas
follow your
change.
rules, and you
Forecast
treat it as a
107
probability.
BCF on the prior.
So again, if that guy's talking over me, let me know. I have it down as low as I can on my computers, but it still picks it up at full blast for some reason. All right, so that's the current zone. 93.50 down to 91. Oops. A little dyslexic there, sorry. 41, 91. And your current ATR in here is 4.60, which actually isn't bad. It's been really, really bad lately, but it's picking up a little bit. All right, so here's my prices. So I don't know what this volume setup is as far as bearish bullish until it touches a validation price. What's the validation price? It's 1 ATR away from the zone. That shows me, again, from watching so many of these, I've learned that if the market can push an ATR away from the volume event, it's telling you basically the odds, the probabilities of it going that way, right? So that's how I determine it. Remember, trading is nothing but probabilities. There's no sure thing in trading. It's just taking an edge and continuing to trade it. All right.
NQ stop sell NQ 151 contracts.
Stopped out of that, obviously, the NASDAQ, but I was able to. For some reason, I lost more than I should have, though. I'm not understanding that because I trailed my stop too. So, according to this, I should only be, oh, this is why. This is exactly why. So I was doing a demonstration the other day. I had this at $1,000 risk. No wonder I was like, why is that more than I want to be risking? So first of all, this is based on the Apex trading accounts, right? So a couple of them, well, one was live. I blew that out last week on a bad day. We'll go over that and how you guys can learn from my mistakes. But these Apex accounts, I'm way more aggressive. So I'm risking 10% on a trade. Actually, this is wrong too. No wonder I got smushed on that one. All right, so I'm risking $500 a trade. If you are trading real money, you should not be risking 10% of your trading account on individual trades. You are going to blow out your account eventually, 100% guarantee, not a question. So the most you should be risking, so say if you do have a real $5,000 account, real money, you should be risking 2% max on a trade. Unless you love the trade, you can trade, double size, but the most you should be risking in a day is 6%. If you hit 6% of your account size in a day, you should be shutting it down, done for the day. Things aren't making sense, which has been happening a lot lately, on to the next day, right? So anyway, you should be risking $100. For these Apex account, I'm being more aggressive, so I'm risking 10%. So I had this, I didn't check this, I didn't see this, and I just lost more than 150% of that. I lost $750 on that trade, which I shouldn't have. But anyway, stopped out of that. So on the ES. Risk is the most important thing, guys. If you don't have a trading account to trade, it doesn't matter how great of a trader you are, right? So risk is number one. If you have to control your risk. You're going to have a bad day. Take it from me. You're going to have many bad days. It's not the end of the world. If you have an edge, you just keep putting the trades on. But on for that particular day, you just say, Uncle, you win. I'll see you tomorrow. It's easier said than done, I know. But trust me, you get your head kicked in after 100 times, and you're finally going to realize it. So I'm trying to help you realize it before that has to happen to your trading accounts. Take it from me, it will happen. So control your risk, monitor your risk. All right, so to make this a short setup, 86.50, which I think we got to. So this isn't officially a short setup. This was an ATR below this volume event. So I think all I have going here is the BARF trade. Let's see. Bigger picture, just in the middle of nowhere here. So these are my inflection zones I draw from my room every day. So that these go back to really important areas, and the market will continue to respect them. I would have probably deleted this current zone here on this, but then it launched from here again. So these zones are drawn in the four important areas of trading: tops and bottoms of balance areas. Balance areas are just two-sided trade. High volume nodes of balance areas. I don't usually actually draw the high volume node because you can just eyeball it, but there's a lot of stuff that usually happens at the high volume node, so I have zones there anyway. And then directional conviction, something like this. This is directional conviction. And then buying and selling tails. There's a selling tail and directional conviction. So you can see a lot happen in the zone, and then we built balance here. There was a bunch of ice here. Directional conviction came through. There was sell ice. Launched through there the other day, and you can see this came back right to that sell ice area. This was like 45,000 sell ice 27,000 sell ice during the trading day, like all in one area. And you can see this market blew through it, and this is exactly where it stopped, right in that zone. So I don't have a zone drawn there, but it came back to this inflection zone.
We do get the EIA
so anyway, bigger picture, just in the middle of nowhere. This is just forming balance here. So the next move out of this balance, this is a multi-day balance for this week, is probably going to be your bigger move. I'm favoring that based on what's going on, but these markets have been irrational to say the least. I mean, at least nonsensical to me. So it wouldn't surprise me if we did that again. Like this day for last Friday was just insanity. Thursday and Friday, like Nasdaq was just ballistic. It moved. So Nasdaq basically moved 900 points in a couple days, which is just nutty. Especially in this environment and the debt ceiling talk and everything else that they come out with tape bombs every 5 minutes lately. But anyway, this was the move, and just craziness. Started with the NVIDIA earnings and kept going. So the main thing you want to take from this as far as bigger picture, like Russell and Dow are nowhere near looking like, they look completely different than Nasdaq, right? Like Russell is nowhere near, its highs and, recent highs, and actually looks like it's about to break down, right? So this was the most current balance here, broke out, held where it should have held, basically a high volume node, and now is back below here. So this is looking like that. So something's going to give. Either these other markets, Dow and Russell, are going to lead, and Nasdaq's going to give back this entire move, which would not surprise me at all, or Nasdaq's going to pull all the markets back up. But it already tried once and didn't work, so that's why I'm favoring that. Doesn't mean it's happening today, but that's my thesis, and not right this second, right? So you can see this Nasdaq keeps bouncing, it's doing nothing, keeps bouncing between these two inflection zones and building balance. But I'm ready to go. If this breaks this balance, I'm definitely short thesis, and meaning I'll still trade long setups, but if I get short setups, I can trade them bigger because it's matching my thesis.
Until we
We'll
send
get
a
into that
debt
little bit
ceiling
too.
bill to Biden's desk. Says Democratic leader Schumer,
All right,
saying
so
the US
we
Senate
know this
will
is a
stay in
short
session
setup. We're
until
now
we
waiting
send
for a
debt
retest
ceiling
of the
bill to
zone in
Biden's
ES.
desk. So Schumer
So
currently
the only
speaking
real
on the
trade
Senate
here I
floor.
have, let's see if there's any liquidity below here. Yeah, there's liquidity. So this is a big level bounce from yesterday, this 41.75. This actually it was a little higher. Spot gamma 41.75. It's moved a little lower today. So this is the area that we want to watch. If I end up going short here, if we go retest failure, I will go short the BARF trade. That's blind ATR retest failure. Just a funny acronym to remember it by. And then I'll also take the lick trade, and I'm playing for this liquidity down here. So those are the two trades that I'm eyeballing there if we get a retest failure. And then we also, like I said, we have this specific trade here where we take a reversion. I don't do these on the webinars. It's too hard for me to keep track of, but then this is on this spreadsheet. This is this trade. So the 1 ATR, because it's uncanny how often these algos, when the market gets to an ATR away from the volume event, they snap it back to the volume event. And that is congruent with what I've said for 4 years of these webinars, telling you guys from my calculations of watching so many of these, this trade back to this zone is about 70%. What the gray area is, well, how far does it go before it gets back to the volume? Kind of just like this, right? So sometimes it's 1 ATR, sometimes it's 2, sometimes it's 3, very rarely 3 in equities. But the majority of the time, the 1 ATR works like a charm, just like this one. There you go, right? So this is the trade. You would have been long at 86.75.
NQ Ice Iceberg Sell NQ 190 contracts.
86.75. You stop out at 81.25, and then you're just playing back to the beginning of the zone, 90.50. So you would have been long at 86.75. Took barely any heat there. This is the reversion trade again. You would have been long right there. Your stop was down here. Back to the zone. You're out. So now here's your ATR. Here's your retest. Now in failure, I will go short. BARF.
1 minute remaining now until we
This
get
is the
the EIA
conservative
natural
play
gas change.
for these zones. So let's see those prices here. Now, so back to the position. So these are two different spreadsheets. This is the ATR reversion strategy. Again, this is all part of my trade room. And then this is the position strategy. So these are the position strategies that I'm taking, and that's these, right? I don't have the descriptions. Those are for my room as well, but I'm talking you through them, right? So the BARF and the lick I will take here. So I can trade, I will short at 85.75, which is an ATR plus 15%. I force the market when it comes back to get outside the ATR to trade this. And guys, this is all by design. Like, this isn't just me saying I want to risk. So I've learned the hard way how to trade these zones, right? I used to, like, as soon as it broke out of the zone, I would get in. I'd put my stop right above it. And then I would just do one of these in a meaningless area, just bounce around the
110
volume
BCF,
event.
110 BCF,
And I would
that's
get
a
stopped
building
out,
forecast of
right?
107
And
BCF.
so I've finally
Big
learned,
loads,
okay,
natural
for
gas
me to be
kicking out
proven
something
wrong,
there
so if
after
this
we
comes
build
back here, first of all, I don't get in
110
until it
BCF
can
on
come
the
back,
forecasted
because that helps me
807
avoid one of those, right? So if this bounces off this volume event and comes back, that's telling me something. Then if it can push outside of an ATR, that's telling me something. That means these algos are being beat. There's bigger forces at play, so that's where I would go short. Well, for me to be wrong, I don't just say, oh, I'm putting on, like most of you guys do in here, which is the biggest mistake you can make trading. When I put on an ES short, I like to risk 3 points to try to make 6. Like, this area means nothing to the market. It means something to you. It doesn't mean anything to the market. So get your stops. What I do, again, you might want to listen to my experience. I get in outside the ATR, and then I put my stop. If I'm going to be wrong on this trade, I force the market to come back the ATR, get through the volume event, and push outside of an ATR the other side for me to be wrong. Yes, I have to risk more points. This is all, and it's fine. All you do is you're adjusting your size based on the size of the zone and the volatility. So it doesn't matter what, if I'm risking, so if I put this trade on, I'm risking 13 ES points. Well, with this volatility, that's not a lot. Like, this can go 13, 26, 50, 52 points, whatever, based on this volatility, meaning the 13 points is based on the current ATR, the current volatility. So I don't change that. This changes. So if this market were to go crazy right now and the ATR goes up to 10, well, now I'm risking 25 points. I'd still put it doesn't, I don't change anything. I follow my risk rules with the points. I just change my size. So I went from basically trading 7 down to 4. This is what you change, not what you're risking. I don't go on this rant every single week. If you are putting static stops in with your trades, you are not going to be a profitable trader over the long run. I will promise you. All right, but there's something on NASDAQ here. So let me get these orders in. I got to remember to put orders in before I start ranting. 85.75 I can put on 8. And that is the BARF trade. And the lick trade. All right, so those orders are working. I'll fill there. If I get filled, I stop out at 98.75 based on this current volatility. You always want to make sure that, but actually this has just popped up, so you want to keep changing this until you get filled. So 85.25 now.
We have also posted out the weekly EIA natural gas storage report on
like
the
I said, this thing's a godsend. We don't have to sit there and keep guessing. It's just you plug the values in and it tells you exactly where to put the trade on. All right, so we're just waiting for that. So, if this market ends up ripping from here, wouldn't surprise me because that's what it does every day, it feels like. Well, then that short is going to be canceled. If this gets an ATR out of here, out of this zone to the upside, then I cancel my short. I can't put on a long either because this has already qualified itself for a short, but I'm just done with that volume event. Trust me, there's another one right around the corner. So we'll wait there and let's see what happened here in NASDAQ. More sell ice here. 244, so let's draw this zone. Remember, so you want it to draw these zones. This is what I was getting at before. You want the last price line on your chart, so right click these bubbles, configure visible components, click last price. Then you want to take the bubbles off to help you find the last price line. And then you want to draw all the prices that happen in this spike. So wherever the price went during this spike, you incorporate in your zone. There. This really started spiking right about there, so I think that's right. Let me change the color here. I think that's grayish. I'm colorblind, but close enough. So let's see if I got all the prices. Yes, so you see
so just
this,
as a reminder,
these prices
you can trade
fell in this
non-farm
spike.
payrolls
Use your
with our very own
crosshair.
Tony
All you gotta do
Friday
is
at
basically
8
drag,
AM
see what it
Eastern
started
Time.
there, and
So
say,
as
okay,
a reminder,
price,
the videos on the
price,
feed for all those
all in there,
interested,
yes,
again,
done.
happening
All right,
Friday,
so that's
8
the
AM
official
Eastern
zone.
Time.
Now we just goes through the same routine, right? Put the zone prices in the spreadsheet. 98 to 98.50 down to 89.75. Go to the NASDAQ tab. What did I say? 89.75. And I'm gonna have a I'm very, very close to releasing my new SI indicator course with all this new stuff, the sweeps and everything else, and just an updated version trading the ATR. But I'm also going to have a ATR reversion course as well, and you will get access to the spreadsheet to that if you don't have time to join the room or whatever. So you will have access to that in another way. I'm just getting a website built with the the ATR spreadsheet in there, so that's coming up soon too. So what did I say? 89.75. Then I will also have a course that details all my trading strategies, and that'll be like a continuing education type of course where every time I add a strategy, you'll get the new strategies. So it's like, because I'm going to be adding, that's just the tip of the iceberg. So these strategies for my room are just the tip of the iceberg for all the strategies I have, basically in my head that I've traded for years. So there's going to be many of these. The point is, when I come out with that course, you will get these strategies, the exact, examples, screenshots, but as I add new strategies, you'll have access to those. So it's like a one-time payment, and you get access to all my strategies as I release them. And there's always new strategies, right? So we're coming up with, nothing's going on here. That's why I'm kind of digressing, but this market pulse, we're seeing huge things with this. Like there's going to be strategies based on market pulse. There's a lot in the hopper coming down the line. So speaking of which, just a good example here, you can see these buyers here got really aggressive. You can see it in two ways. You see it on the market pulse and you see it in the sweeps indicator, right? So they swept this. So this is a great example of all stop runs are sweeps, right? If you see a stop run, those are always sweeps, but not all sweeps are stop runs. So this was sweeps. You don't see any stopping. This was tiny. There was nothing here. So these sweeps, you can see there was 1,000 sweeps here. Those were not stop runs, right? So this is important information. One, even if the sell ice wasn't here, so we know the big money tried to stop this, and it's still holding right here in the middle of the zone. Somebody came in and swiped 1,000 of these, and you can see it on the market pulse indicator, right? So if this continues, well, then the sell ice is going to be wrong, right? But if this holds, the buyers are wrong. So the point is, this is an important volume event area with the market pulse and the sell ice that you're probably going to get an outsized move out of this area, and that's what we look for. That is the edge, right? And then how you trade these areas is that's the key. So guys, this is what drives the markets. I don't care what indicator you have on your chart. It doesn't matter. Doesn't mean anything unless there's real volume playing in those areas, right? Or no volume, right? Yeah, if you come to an important area and there's no volume there, that's a good place to fade too. But the point is, we are looking for these trader invested areas, because when it breaks out of here, somebody's wrong. Somebody's got to puke, right? That's what we play. That's the edge, right? And it's all based on my personal experience as a scalper on how I used to react when I was loaded up. So all these setups are not hypothetical. They're actually real life occurrences that I went through as a trader. You know, all these different trades and how I'd react to these volume areas. And trading against the other big traders at the time. Back then you can see counterparties, so I can see exactly what they're doing. It was a big poker game every day. I would see the house, I'd know exactly how they would react, I could know how many they can put on, so on and so forth, just from trading against them every day. I used to trade in and out all day long, literally 50,000 round turns a day, and that's when the ES was only trading 500,000. So I definitely have, I don't know anyone on the planet that has more volume experience as far as watching orders come through. So that's what this is all based off of. All right, so this looks like this is probably going to be a bullish setup. So I've already tried to go long once here. Let's try it again. Make sure this is right. ATR is 23 now, 23.68.
Gold Ice Iceberg by GC, 152 contracts.
Look back at that.
McConnell voting
So
for the
22.25
debt
is
deal
going to
in the
make
right
this
direction,
official
says
bullish,
Republican
bearish,
leader.
bullish
McConnell saying
setup. Sorry.
voting for debt
So
deal
we're still
is
not there
step in
yet,
the
but
right
pretty
direction.
close. Again, if this gets to 22.75, this is officially a bullish setup, and shows you those buyers, whoever swept this, knew what they were doing, right? But then, based on this area, I already
Bonds Ice Iceberg by ZB, 671
some
contracts.
bonds, so something's going down. There's probably going to be a big move here. When you start hearing bonds, not so much gold, but bonds, and like you start hearing Dow and Russell, there's usually a bigger move happening. So, I mean, this is smack dab in the middle of these two zones. I usually will play an Izzy trade. I'm not playing any. Yeah, you can see this is right in the middle of these two zones. So this is probably forewarning you that now with this big volume that's happening right in the middle of this, now this is finally going to break out of here one way or another, and you're going to get the outsized move. So now we just wait. So I'm not going to trade it as a trade. All I really got going here is the BARF trade, and there's the official ATR price, right? Let me get rid of some of this. Let me get rid of this one here so it's not confusing, because there's enough stuff down here. All right, so per my rules, like this is not an aggressive trade, meaning I'm not getting in. The minute it breaks out of the zone, I'm not getting in. I'm waiting for the retest. Does it mean it has to retest? No. Like I said, my calculations is about 70% it'll get back to the zone, right? If it gets back to the zone, retest failure, then I'll go long. ES, I don't think did I fill? No, I never filled on the ES trade. So this is exactly why I wait for retest failure. Right? Get this off here for a second. So this was the volume event. We already discussed this. There's your ATR. I was waiting for that. Well, guess what? That didn't happen. I avoided getting run over. Right? So that's a good thing. And that's why I wait for the failure back out of there. Just, again, this is all from watching thousands of these. So you can, we say it every week. This is the science. There's no disputing there was 1,500 sell ice there. How you trade these zones is the art. You may want to take my lead and kind of do what I'm doing at first, but as you watch the thousands of them yourself, you may say, hey, I like to do a certain thing when this happens, so on and so forth, right? So you don't have to follow my rules to a T. You can make it your own. But until you have thousands of them you've watched, you probably want to listen the way I trade them, right? And that's why I demand that. That didn't happen. I just avoided a short loss. All right, so shocker, the markets are ripping. Speaking of which, let's get some torture going here. Tick strike. So I usually, I know this gets very loud during the webinars. Hold on, guys. So if it gets too annoying, please let me know. Again, I have my internal volume down, but this software picks it up. So, but this is really important because I want to know, hey, is there something behind? Oh, here we go. It's already screwed up. Let me close this out and bring it back. I want to know, hey, there's a real buying behind this move? Well, what's the real buying? Well, first and foremost, the FANG stocks, because these are the stocks that drive the indices that drive the futures. So these are the highest weighted stocks in the E-mini S&P or the S&P 500 and the NQ or the Nasdaq 100, right? So you can see here, nothing's really going on here. I have these set at 11, so these meters go from 1 to 15. So anything 11 or above is serious buying or selling. You can see these aren't really going off right now. So that doesn't mean I just short it, but this is good information, right? And then that's what also the market poll. I don't know what the hell is going on here. This is very strange behavior for this. There, so now they're starting to buy them, right? All right. So again, I didn't trade that trade aggressively. I may miss this long on NASDAQ, and it is what it is. Like I said, there's another one right around the corner, but per my rules, I did not get all there were no other setups to trade here as far as my trading strategies, right? So there's only a couple aggressive trades anyway. The slug, which is a stop run at the major lugs. This has already bounced off. You can see how powerful these lugs are. This is why we use them. The second most powerful thing I've ever seen in my trading career next to the Bookmap. Bounced off a blue lug, bounce off a blue lug, gone. Now it's probably headed to the red, right? So what else are we seeing here? So yesterday's trade, market profile, we tried to come up with a thesis with this as well. So this was a prior market profile composite, meaning multiple day value areas merged together. Opened up, broke out of here, tried to get inside, closed outside. Again, opened up, closed outside, now it's back inside. So when markets get back into market profile composites, the tendency is to get to the other side. So it's just good information to know, okay, this should hold. A lot of times it'll come back, it'll tell us we actually have a trade. This is called the profiles encouraged trade pick. If it comes back here, I would take that long. But many times it'll retest the edge of it and then it'll go, right? So this is a good example of a thesis. So this should hold in here. If this all of a sudden turns around, gets back out, well then I would definitely have a bearish thesis for the rest of the day, right? So right now everything looks like, the blue lug held, that volume event was bullish, and now this is in here. So the thesis should be, short-term thesis should be long. Granted, like I said, this is still stuck right in the middle of this balance area, so it's about to break out though. So this is, this could be a balance breakout here. All right, so it sucks.
S&P stocks stopped by ES 500 for contracts.
Like I said, so I wasn't able to trade that first setup. There's another trade right around the corner, and another setup right around the corner, and here it is. Problem is one of my alerts are going off, and I don't know what market that is. I need to talk to the developers and tell them they need to have a So, when these SI alerts go off, you can see where they were. Like there's that ES stop that just fired off. But these, if you put in your notification alerts, like if it touches price, you have no idea what market it is. Like I forget. Like I'm watching 17 markets, so I'm like, okay, what market is that? So we're probably gonna have to listen to that for a bit until I figure out what market's going off here. All right, so these are the stops. You can see they're buying all these stocks. So again, this is tick strike. This is what I showed you guys.
NQ stops stopped by NQ 155 contracts.
So just comes on my website to that right there. All right, so now we got NQ stops as well. Let me draw this. That kind of sucks. I didn't have a setup there to get long that NQ. I was long earlier, and they came back and stopped me out, and now it's going. But that's trading. You just keep putting them on, guys. That's the whole point. It's the probabilities. You get stopped out, you see it again, you put it on again. I just didn't have the aggressive setup there, or I would put that on again. I would not have hesitated, right? And that's where traders also make mistakes. They have the recency bias. Read trading in the zone, which we allude to quite often. Recency bias is where you take like 3, 4, 5 losses in a row, and then you're afraid to put on a trade. And then you sit there and you're like, I don't know, man. This stuff's not working anymore. I think I have to move to a new strategy. And then the market rips 150 points, and you're like, why didn't I put on that trade? Right? Everybody on this webinar knows what I'm talking about. All right, I got to figure out where the hell this alert is coming from. Hold on. I definitely want to talk to them about that, the Bookmap developers, and about getting some notifications for the market pulse as far as text, because it's just not, you can't find where the hell it's. Just bear with me here a second, guys, because I can't concentrate with this thing going off nonstop. It's kind of ridiculous that I just sit here and search. Oh, by the way, I'm short wheat. Oh my gosh. Hold on. Oh, annoying. I know. This is what I got to do. Like, I have no idea what market it is that's firing off because I put it in. It could have been even from yesterday, right? Maybe it's soybeans. Let's see. I can't find it. All right, so we're gonna have to put up with it so I can get these other zones drawn. I'm telling you, I'm gonna bitch about it the entire time. So.
S&P Iceberg sell ES 762 contracts.
All right, so now you got sell ice coming in here too. All right, quickly, let's just look to see where we're at on this chart. See if I have any aggressive entries. So this is an Izzy trade. So this is an aggressive entry off the stopper, and let me show you how I'm going to do this. So quickly, I got to get this in 402.675 to 402.350 or 420.350, something like that. Hold on. 42.0675. 42. ATR is 5.45. Struggling with the spreadsheet today. Hold on. All right. So I know this is an aggressive entry. So I'm shorting ES out of that zone. We'll go back to that 97.25. I can put on 7. Put that in. Then I'm going to show you what I'm going to do with this new setup.
So in 10 minutes time now we do get the weekly EIA inventories data. So crude oil inventories forecast minus 1.5 million on the prior of minus 12.456 million with a range of 2 million to minus 5.147 million. Gasoline inventories forecast minus 1.1 million on the prior of minus 2.053 million. Distillate inventories forecast 1 million on the prior of minus 0.562 million, and crude Cushing inventories saw a previous of 1.762 million.
So what I'm doing here, this is an Izzy zone, inflection zone. We nicknamed it Izzy. This is the Izzy trade. This was the trade that was live, the account that was live on Apex. Because I'm doing each Apex account to make them live, and get the correct stats to bring them all in independently. But then I blew it out last week because I was trading too big, and I exactly what I told you guys. So first of all, I'm trading 10% of the account size, which you should not be doing. And then I was in the here. I'll just show you real quick since this is kind of just sitting in this zone. So I was doing this account. So the only thing I don't like, I love Apex. This thing is the best thing for you guys if you're just learning or practice, even practicing or whatever, or even if you don't want to risk your own money. Right, you do this. If you trade well, then you get funded. But the only thing I don't like is This is not a $50,000 account, right? This is they say it's $50,000. Well, if I hear $50,000, that tells me I can lose $50,000. No, you can lose $2,500. So that's the only thing I don't like that, and all these trading funding that are popping up everywhere now. They make it sound like you can trade that. You can't. You can lose this. So anyway, my loss limit, and I had a trailing drawdown. I was up $2,500 on the account, but I still had a trailing drawdown of $2,500. So last Monday or Tuesday, the most I should be losing on this in a day is like $500 at most. That's even too much, right? Remember we said 6% of your account size. I lost $1,700. I had a series of 4 or 5 losing Izzy trades in a row. For example, on some days stuff just is not working where you just say, uncle, you can't lose that in a day. You just can't do it. You're going to blow. This is my example of earlier. You're going to blow out your account. And then guess what? 2 more trades, I blew out of the account. So it was painful, but it was actually more embarrassing than painful because all I do is chirp
Soybean Ice Iceberg sells ES 153 contracts.
About risk management, and then I do something like that. So it's like it can happen. That's why you constantly have to monitor yourself, because it can happen so easily. We call it going on tilt, right? You're like, screw this. I'm already down 1,000. What the hell's another 500, right? I know everybody knows what I'm talking about. Trust me, it will catch you. You might get lucky a couple times, aka negative reinforcement, where you're like down. You guys, I've told that story 1,000 times too, where I had the loss limit with my trading firm. Let me draw this while I'm telling you my stories. I had my loss limit for my trading firm every day, King Street Trading, was $100,000. So if I lost 100 grand, they turned me off. There's literally a risk manager that sat in his office. All he did was monitor the traders and shut them off if they had the risk limits. That was his job, right? Well, it got to the point. I'm just going to merge both these, by the way. We'll go over this here in a second. Got to the point where I was doing so well, I would hit my $100,000 loss limit, and then I would, they wouldn't turn me on. They're like, cool down, and then, if you feel better in the afternoon, we'll think about giving you more, right? So then that would happen for a while. So I would cool down, come back in the afternoon, and then a lot of times I would make it all back, right? So that's negative reinforcement as far as your loss limit for the day, because some days you make it back, and then all of a sudden you start to ignore your loss limit, and then you get absolutely smushed. So then I did that a few times, and then they just stopped, not even stopping me at 100 grand. So a couple times I was down like 200-300 grand. They would just be calling me. Of course, I'm not going to pick up the damn phone. Like, I'm pissed. I'm like breaking screens. And 2 different times in 1 month period, I lost $800,000 in minutes. 2 times. So if my firm, it's my responsibility, but they were also supposed to monitor me. If they would have stopped me, or if I would have stopped myself, I'd have an extra, instead of losing 200 grand, I lost 1.6 million, right? So I'd have another $1.4 million in my bank account if I just would have followed my risk loss for that day. So I can't stress enough. You don't have to lose millions of dollars till you figure it out. Listen to me, right? So it's not a good story to tell. It was what was that? It was almost 20 years ago. It was 2004, February and March of 2024 or 2004, and it feels like it was yesterday. So you don't have to go through that pain, is what I'm telling you. All right, so this new zone is here. I'm still going to trade aggressively off this first zone to the short side, and then we're going to trail the stop to this newest zone if I get filled on that. Hold on, what was the price here? Yeah, so 97 quarters. So the aggressive entry here for this trade is 97 quarter. So this touch it, I'm getting it immediately. And for this trade, I'm not waiting for that, because this is a very important area, aka inflection zone, Izzy, right here. And these are some of the best Izzies. When a market moves beeline straight into a zone, very good chance for failure. Got to be careful here, because this is still at the top of this balance, but this is about to break out of this balance. Granted, you got this guy here in this gap. Actually, I don't know why I don't have a zone drawn here. There should be a zone right here where this market gap down. Hold on. That's my bad for my room. I would incorporate these tails. So tail, tail, tail. So you get a good example how to draw a zone here. Got those tails, and then you have where this market gap down. So gaps are directional conviction, right? So this is the next zone up. So this Izzy zone, I would not trade aggressively. We have rules where if it's breaking out of balance, you don't want to be aggressive in the Izzy zones. I still take the Izzy short, but I would just like my conservative entry with the barf trade. I'll wait for ATR retest failure. So that's down the line. I mean, if we get up there, I'm saying. But right now, I will still take this Izzy short if this fails in here. So waiting for that. Let's see where we are on the lugs. This may even be a slug trade. Let's see here. No, just yellow lug. But there is, what is this? What is this black thing? What the hell? Okay. So yellow lug. This is actually going to be the next, we're going to have a playbook on this. This is called mellow yellow. When you have a volume event at the yellow lug, that's extreme standard deviation of VWAP. So you can see here, this is VWAP. So this 1, 1.5, 2. This is actually 3 standard deviation. The odds of this continuing are very low unless there's big money coming in. How do you know there's big money coming in? Well, one, with the volume events, but then the main way is relative volume. So unless I see, so this relative volume is not bad. So this could continue. I still put the odds of a pullback because the algos will snap it back at these areas. But you can see here, this move over here was 2 times normal volume. So this is a relative volume chart based on the last 30 days, this exact time period. That's the relative volume I use. You are not getting the same, if you're using Thinkorswim, this is not the same relative volume. I do not like, I don't even have it up anymore on this chart, but I had it on here, yeah, here it is. So this is not the relative volume that I use. This relative volume is, and you can make it any period you want. This is a 60 period backlook. Well, of course, like the open's always going to be, it's usually 7 to 8 times normal. What does that mean? It's 7 to 8 times normal? Like crazy? It's crazy? No, it's 7 to 8 times normal the last 65-minute periods, and you're going back overnight. So of course the open's going to be bigger, right? So unless you know your, so for like I said, so I know normal is 7 times. So unless you know your exact time periods for each day, like what they should be, this chart, this relative volume is meaningless to me. I don't use it. I use the exact time period relative volume on my. So I know for the last 30 days, this 745 or 945 time period, this is double the volume. That's important information to know, right? So my point is, you will usually fail at these areas unless you get some heavy relative volume coming in, because these algos take over, and they're already winning right now, right? So again, we yellow lug, which is powerful in itself, all right, but you got 3 standard deviations, and they start to revert it back to the mean, right? What else do we have here? Important area here. See this? Thesis-wise, this is the most recent market profile composite. This was like a 2 or 3 day market profile composite. Opened up yesterday, blew right out of it, came back, retested exactly, failed again. Here we are again. Now it's trying to get inside here, just like NASDAQ. If this holds, then you expect the other side. It's going to be very important what this does now. We have a volume event here too. If this fails back out of here, watch out below, right? So, and it's already tried. So this is actually a profiles encouraged trade too, where I will trade these volume, and the volume event happened right at the edge of this. I would trade that aggressively too. So I'll put on 2 different shorts here, the Izzy zone and the profiles encouraged. I don't think I put profiles encouraged on it. Yeah, I did. So this is a kind of a funny spin. This is a book by John F. Kennedy Jr. Profiles encouraged. It fits the line with the market profiles, and we name it PIC, right? All these are meant to be memorable and funny, just so you remember them. All right, so I'll short that as well. I forgot what price I'm shorting here. And remember, you want to keep adjusting your ATR until you get filled, because this will change. So this is already down to 4.83. So I was going to short it 97.25. Now I put in my new ATR. It's up to 98, right? This is why this thing's such a godsend. So now I'm going to move that to 98. That's the Izzy trade. And then I'm going to put on the profiles encouraged trade at 98. And I'll short that as well. All right, so those are working. If I do get filled, then I'm going to trail my stop based on this newest sell ice setup here. And then I can trade the sell ice setup as well. I wouldn't trade it aggressively because it's a back out of that zone, but that Izzy zone, but I could put it on the barf. So this is all stuff I just have in my head if it starts rolling my way, right? You're always coming up with if-then scenarios. I could also trade this new event to the long side. If this holds, this is that sell ice zone, and we do this, well then I can trade that. And then that short off of this zone would be disqualified. So now you just wait. right? I have no idea what's going to happen here. Nobody knows what's going to happen here, right? So you sit here and you wait. I have my rules and how they should react to these zones, and we will trade them accordingly. I'm still waiting for something in, actually it just came out, didn't it? The crude number just came out, I think. But anyway, you can bet your bottom dollar where crude's headed. This did lighten up a little bit, but you can see this down here. This is not, oh wow, look at all those buyers, I want to go long. No, it's all these buyers. This is the game that we just talked about earlier. They will push this market into these orders. Does it mean it's happening right this second? No, it can go up another 100 ticks before it happens, but I will bet you, again, anyone want to take the bet, round the golf in Scottsdale, I will bet you this market hits this liquidity by the end of the day. Anyone want to take that bet? Throw it in the YouTube room. Speaking of which, see if you guys got any questions. All right, Captain Price is quite active in here. So the first thing, I'll go back to these earlier questions, but the first thing that I see here, the biggest trader fallacy that there is. And Captain Price, you're going to get a little bit, I get verbal lashings in my trade room every day, and they're meant to help traders. They're half joking, half not, but they're to kind of put traders on the spot and make them learn, because you're not going to learn by me kissing your ass. You're going to learn by me telling you that is incorrect. You're making mistakes. So when I read, this is exact, again, out of your 85 text you posted here, you said, so no shorting for me. Thinking it still can get higher. So is that part of your trade plan? Do you have a trade plan mapped out where you say, I put on trades based on what I'm thinking? Or do you use areas in, actual volume events or whatever you're using? Or do you just think? That's the third biggest problem with traders, right? So a good example last week, you got a verbal lashing for it. There was a volume event like this, and it gets set up as a short, and the guy's like, well, first of all, there was liquidity above, just above it. So I can't remember who said it. I won't embarrass him again. No, it didn't embarrass him, but I put him on the spot. And he said, I'm not putting on this trade. There's liquidity above, and that's not a bad assumption. If you have that built in your trade plan, that's fine, but you got to do it every time. That means you can never put on a trade if there's liquidity above, a short, so on and so forth, right? So the other thing is like, this market's going crazy. I think we're still going to go up. Well, what the hell does that mean? So the perfect example, Captain Price, if you think it can still go higher, then you should bet your house, put on longs right now. Put on 500 ES, bet your house, and put it on and go for a walk and come back and see it's higher. Why don't you do that? Because you don't know what's going to happen. That's the whole point. So this thinking thing, that's why you need rigid rules in your trading. It's not what you think, because you don't know. Nobody knows. What you can control are your risk rules, right? Anything can happen. You don't need to know, nor do you know what's going to happen next in order to make money. So every time I see something, I think this is going to happen. Okay, well then load the boat long. If you think it's going to happen, why aren't you trading long, right? I mean, I'm talking your entire net worth. If you're not putting on shorts because you think something's going to happen, that means you know it's going up. So put on your entire net worth. Do you see what I'm getting at here? You don't know what's going to happen. Nobody does. You know how to be a casino, right? So if you go to trading, and this is directly out of Trading Zone. Yeah, I've added my own stuff in here, but this is out of Trading Zone. Do your exercise where you pick any market. You choose a set of variables that define the edge. Mine is the SI indicator, volume events, and setups, right? And then trade the variables. You define the variables for your edge, and they have to be absolutely precise. And you see what I'm doing with these volume setups, right? With the ATR, and it has to do this, has to retest, has to fail. Those are all rules of my trades. If you trade in here thinking something's going to happen, you are never, ever, ever, ever going to make money consistently. I will put my life on it. Okay, so stop thinking and start having trade plans and following your rules. So that is going to be my main rant for today, I think, unless someone else puts something ridiculous in the trade room or in the chat. So hopefully that makes sense, Captain Price. But you're headed for a world of hurt over your trading career if you're not putting on trades because you think something's going to happen. So don't get me wrong, right? Thinking something is going to happen could be a thesis, right? I have thesis all day long. That's the whole point. But it doesn't mean I don't put on trades the opposite way, right? So, my thesis, like, for instance, here we go. Like, my thesis right now, and I'm not even looking at the bigger picture stuff, I'm looking at this liquidity. My thesis for crude, it's going to hit this liquidity today, right?
Crude stopped by CL. 255 contracts.
See, I told you there's a camera in my office looking over my trading. I'm telling you. Right when I mentioned that, they fire off the stops. I'm just kidding. So the point is, I think this is going to happen. Does that mean I don't take longs? No, I'm a day trader. If I get like right now, if this volume setup turns out to be a long setup, I'm taking a long, even though I think it's going to get down here. So how do you take advantage of something you think, aka a thesis, right? Well, when you get a bearish setup, then you trade it bigger. But it doesn't mean you ignore your longs, because, I mean, I don't, because I'm a day trader. You can't, there's nothing wrong with eliminating one side of the market where you say, okay, this market's breaking out a huge balance and I think it's going higher. I'm not going to take shorts. Okay, that's fine. You don't know what's going to happen, but if you want to trade that way, but you got to do it every day. It's not one day you don't do it, the other day you do. You see what I'm saying? So like this breaks out of here. You're right here. You're like, you know what? This is breaking out of a week-long balance. I'm not taking shorts here. Okay, I'm okay with that, right? But that's not just, that's a rule. You have a rule of your trading. That's not thinking, well, I think this is going to do this, right? Again, anytime you catch yourself doing it, you're going to I catch myself doing it all the time. But anytime you think it, it's like, okay, well, if I think that's going to happen, why am I not betting my house, putting on trades right now, betting my house? Because you don't know, right? So come up with a set of rules with a defined edge and follow them, and you will be a successful trader over the long run if you stay consistent. All right, let's draw this because I do definitely want to short crude, like what I was just talking about, because my thesis is, so if this turns into a short setup, I'm going to trade it bigger because my thinking or my thesis is short just purely based on that liquidity blow, because I've watched it happen about 5 million times. The big money always gets their way. Doesn't mean it's going to happen, like I said, right this second, but round of golfs that it does by the end of the day. Sometimes it's not even by the end of the day. It'll take a couple days too, but I will bet someone wants to bet a round of golf. We hit that liquidity today. The bet's on the table. I'll give you my upside where I'm wrong versus the downside if you want to make the bet. 69.17 down to 69.11 is your zone. And your ATR in here is 24.244. So that means it's basically rotating 25 ticks every 5 minutes. All right, so let's look at bigger picture first, see if we have any aggressive setups here. This is an Izzy zone. So this isn't just like the ES where I was gonna, where I still will short aggressively. Here we go. What happened here? Selling tail, selling tail, selling tail, rejected, right? It's not ridiculous, but it's still an Izzy zone. And then, oh, I take that back. This is ridiculous because this was where this market gapped down about $5, right? So this is where it closed this day, and this is where it opened. So this zone is very important. So it gapped down, and you can see, so you have that zone drawn originally, and then look where it failed. Comes back, failed. Came back, failed. That's why, because this was a very important area, and that's why we draw these zones. So this is right back into the zone. Stop run. I already want to be short. I'm going to be short. I'm going to be short aggressively, but I'm going to trade double size on this as well. And I'm going to put on the lick trade and potentially the bar trade too. So while I chirp, I'm missing the trade per usual. Hold on. So my aggressive entry here, remember, I'm not waiting for retest, even though it already looks like it's ATR retest. I'm getting in aggressively. I will short at 83, and I'm putting on 8, but I remember I said my thesis is short, so I'm putting on 16 here. Hold on. I'm short week 2. I might want to put my stop in there. I forgot about that. Hold on, guys. I'm just trying to find my crude. What did I say? 8. So I'm going to put on 16. Trading double size here. This is the Izzy account. So if this comes back to 83, I'm short. So that's trade number 1. See what else we have here. So let's get down to the validation price first of all. I can put on other trades. That validation price was 87. I don't think it got to 87 for the ATR retest trades. Got down to 90. So this is still not officially a bearish setup. So you notice, like, I'm bearish. It's short term. The stop run I know is not usually really buying. Did you see me just jump in a short? No, I'm forcing this market to push out of the ATR plus 15%, then I'll go short. And that's that 83 price, right? Let's just see one more thing. I want to see if there's a profiles on courage trade here as well. And then I'll answer some questions since the market's dying as usual. Yeah, this is a profiles and courage trade too. So this was yesterday's trade, day before, but this was from a prior. This is a prior that still looks relevant. This is a prior market profile composite high. I'll take a profiles and courage trade there too. So if this market moves out, I'm going to short both of them, but and they're still buying this thing. If this gets to 69.41, those shorts are disqualified, right? What would that be? Well, that's an ATR above this zone. That's how I judge. If this gets to 69.41, these are disqualified. Then I can actually play along. Just like I said, I think we're going lower by the end of the day because of that liquidity. Does it mean I wouldn't play along? Nope. I will still play along because I'm a day trader. All right, so we'll let that play out. That might just rip, and that's fine. And I'm not short this shit either, right? You see I'm avoiding, guys, avoiding losses is just as good as putting on winners, because if you have a loss, you're going to take a winner plus another one to get it back most of the time, right? So I have my shorts working in the ES, but guess what? That's not, and we just got up to 41 in crude, pretty close. You can see here, this is the great thing about tick strike. I already knew that was happening because of this tick strike firing off here. The market pulse should be firing off too. Let's see what market pulse looks like here. Then I got to cancel my short. It looks like I'm going to be canceling my shorts in. The market pulse isn't going crazy. But anyway, so now those shorts I just put in, they're DQ'd. That's short for disqualified, right? I had them resting. I was going to go short that. Did I go short? No, I was waiting for the ATR. Pushed an ATR above here. This is now a bullish setup. So now I'm going to cancel those shorts. I'm not going to go short. I should just had the Izzy working. Now I will go long.
Nat gas ice iceberg sell NG 164 contracts.
Gas too. I actually had a nice short in there earlier. We forgot to go over that. Let me put this. I'm going to put an alert here if this retests this zone, and then I'm going to go long if it goes retest failure. Let's see something here. This is still in the Izzy zone, but you know, I'll go long the barf. The barf trade is always in play. All right, so what was the validation price for this? My short's still working in this ES, but remember we set off this new event. If this new event turned bearish or bullish, I'm going to cancel it. My first trade was going to be a short off of that. Well, now you got the sell ice. That was the most recent. If this gets the ATR above here, I can go long and my shorts are canceled. So let's just put that zone in now. 4204.50 down to 4200. You can see they're buying the bejesus out of this thing as usual. I'm sure it's some tape bomb. I'm sure McCarthy just had lunch, so let's buy it. It's just every time the guy, there's never any news. They're just talking about stuff, and the thing it's just ridiculous this whole week. All right, 4.76. So if this market off of that zone gets up to 9.25, then my shorts are disqualified. So this is a long setup. Now I got to cancel my ES shorts that I was going to put on and never put them on per my rules. Avoided a loss again. Of course, going crazy. Everything's okay in the world. Let's just keep buying them and buying them and buying them. This is breaking out of this balance as well. So pay attention to that. Week-long balance, breaking out. It's also noteworthy. It did rip right through that zone. This was an important zone that it failed a couple times here. Tail, tail, balance, breakout. So now if this comes back, I don't have any aggressive trades here. I'm not trading this aggressively. But if this now retests, Again, this is black eyes, this black zone, that's sell ice, retest failure. I'll go long. Is there a chance I missed this like I missed the NASDAQ trade? Sure is, but that's fine. There's another one. There's another setup right around the corner. If it doesn't fit my rules, aka I'm not trading off what I feel, then I don't put the trade on. But there's a very good chance this comes back and retests this zone. So we will wait on that. All right, let's see if there's any questions in here. I know there was some earlier on Apex. Let's start from the beginning. When you look at funded account risk, are you basing your risk on max drawdown or actual account dollars? You need to be doing it on max drawdown, right? So when you're doing these Apex accounts, again, guys, I'm telling you this. There's no reason, in my mind. You can trade your own money, absolutely, but if you're just learning or you're not in a good place trading or whatever, if you want to practice, a lot of guys say practice, not a game, practice. That's Allen Iverson, by the way. A lot of guys are like, well, it doesn't feel the same to me if it's a sim account. Well, this is not. You're still putting money on the line, right? So it's not that you put this in, it's 80% off. Put this code in, and you get 80% off. So it's like $64, right? Yeah, it's not a lot of money, but it still sucks. Like, do you open your window and throw $64 out your window? No, it's meaningful. So you still have money on the line, so you're not going to be an asshole with your trading. Pardon my language, right? Or you may be a little bit more because it's only $64. Only I'm doing air quotes. $64 is a lot of money for a lot of people, including me, right? I don't like throwing away money. My point is, you still have skin in the game, right? So you can practice. And if you get crushed, if you lose this amount, right? So with this one, so this is what most of mine are, right? All of them now. I had the live one was on that. Someone talked me into doing that one. I'm never going to do that one again. I'm doing the bigger one. So the goal is you got to make $9,000 before you lose 5. Well, on the tryouts, this is trailing. So you can be up 7K, right? And then have a drawdown, which happens this happened the first 3 times I did this. You draw down 5K, you're still up 2K overall. You're out of the account because you drew down $5,000 as a trailing threshold. The live accounts are different, where the initial 5K, so say you go up 5K, well then so you start at 150. Sorry for my drawing here. You start, and then if you go back to 145, you're out, right? This is a live account now. If I get up to 155, it moves as trails, so now it's 150. If I come back to 150, I'm still out. But then if you keep going, say you get up to 160, 165, well then it's not 5,000. You got to come all the way back to 150 to be out of the trade. I'd be out of the account. See what I'm saying? That's the difference between. But with the Apex trailing, the tryouts, it's always trailing. So you can be up $8,500, $500 from your profit goal, give back $5,000. You're still up $3,500. You're out of the account. That's what sucks, and that's what's hard, and it makes you really, really work on your risk control. But the question is, do I risk? I am risking a percentage of that. I'm risking 10% of that per trade, so $500 a trade. That's still too much. If you go live, as I learned the hard way last week, you don't want to be risking 10% of this. Bring it back down to 2%. You may say, well, that's nothing, man. It's going to take me forever to build it up. Well, then open multiple. You can open like 20 of these, I think. And then they got on Ninja Trader, you can have Trade Copier who puts them all on at one time, right? So that's my recommendation. But there is just the great thing about this, you can work on your trading. Say you want to learn my system. You come to my room, you're like, I'm hell-bent. I know this stuff works. I watch it every week. I want to learn this. Fine. Don't learn with your real money or your own money. Learn with this. Don't risk your mortgage on learning what you're doing. Do this, and then guess what? If you do well, then you're funded. Now you got a $5,000 account. It's not a ton, but it's not bad. And then say you do 4 more. Now say you do them all for the same strategy. Now you got a $20,000 account, and you just put them all at the same time, right? Unless you're just flush with cash, you don't need to risk your own money. And the guy, I've been using this thing for 1.5 years now. That's why I put my name on it. There's a bunch of them out there. There's a bunch of them are. Oh, by the way, shocker. Did I mention something about the 70% rule where it comes back and retests these zones? So if this retest fails,
stopped by CL 295 contracts.
It's still in the Izzy zone for crude. I'll go back in a second. I forgot what I was just ranting on there, but there's just no reason not to. If you're learning or whatever, do one of the. I was ranting about these other ones, right? Most of these funding companies, they know 95% of traders lose money. So it's a great business model, right? Hey, let's let this up so they just fail and they keep paying us the fee, right? It makes sense. I'm not saying it's ethical, but it makes sense. these guys actually want funded traders. So I did one, I'm not going to name the names, back in 2013 when I really started to like, it was the end of the road for me trading. Like I had to get out of trading because I couldn't make money. So I did one, qualified. Oh, now you got to do the live combine. Did that one. Oh, well, now you got to do the super secret squirrel live trading, blah, blah, blah. It's like, I even wrote to them, like, you guys don't want to fund traders. You want to take their money. Like, you have no intention of actually really funding traders. And so I never used them again. Back to Apex, they want to fund traders. You see right here how much they've paid out. This is not, guys, if people weren't getting paid, you know in about 2 seconds nowadays. Of course, there's always going to be a disgruntled trader that broke the rules, like, oh, this is not. Trust me, this thing would not be around for a year and a half, and I would not be using it or touting it if they didn't pay and do exactly what they said they were going to do. And that's why I did it myself. Before I even mentioned it to my trade room, I tried it myself. I said, I'm going to qualify because I damn well better qualify as a professional trader, right? I'm going to qualify, and then I'm going to let them know, hey, guys, they gave me the count. Hey, guys, I got paid, so on and so forth. So that's the one I put my name on. You can use whatever one you want, but I'm telling you, I've tried a couple of them, or years back, and I've looked at other ones. This is the best one by far that I've seen. So you can do what you want with it, just like every other one of my rules. I'm trying to teach you guys, what I do, so you don't have to go through the pain yourself. All right. I feel like I'm talking a whole lot. So that's that. Sorry I went on that tangent, but there was a question on that. Captain Price, a lot. It's Xing here, dude. What are you doing? You bored? Says, hey, how can I do that? I don't know what you're talking about. SUS. Camjazz. Scott, what do you think of Apple? When can we short it? Camjazz. Or CSMJazz. Come on. When can we short it? Well, if I knew that, I would just, like I said, I'd take my house, get a mortgage, bet it all on a short, and then go to the desert island with Billy Ray Valentine from Trading Places. I don't know anything. I know what you look for. One, I don't trade stocks anymore, right? So I would not be helpful there. What you can do, I did trade stocks beginning. I have actually a course on my website. It was geared towards stocks because when I got back in the business, I was so jaded from being a multi-million-dollar futures trader to zero. So I said, I'm not trading futures anymore. So on my website, this actual, in my store, so my main course, and there's a new one coming out. But again, if you remember my trade, you get the new one for free if you buy this one, if you want to fast track your learning. This course here is based on my stock trading, right? So this is one of my setups this was my playbook for trading stocks. So if you want to learn what I did there, that's all yours. But back to these. So this one is mine. This was my former partner. He's expert at trading the NASDAQ. This is still relevant. I don't use his strategies, but this is great for scalping because all you guys love to scalp. That was his. He was an absolute expert trading NQ, and then he used this sweep show that would help him judge like if the ES was going to break through areas. So these two courses are by him. These two courses are by me, and I've got 4 more coming up. So anyway, I don't trade stocks. And if I knew exactly what was going to happen, then I would probably be on an island right now. Desert island. All right. Let's see what's next here. Just waiting for this retest of the zone. It's never going to be. Oh, actually, before I get into the questions, I don't want to miss because I think we're still in an Izzy zone here in crude. I still want to short it. I didn't take that first short, right? But here's another setup. Right there. They're still buying the crap out of this. Hold on, let's get this up so I can see what I'm doing. But do you see, like, my thesis was short just for that liquidity. Did you see me put on a short because I thought something was going to happen? Sure didn't. I'll put on a short when my trade parameters execute to take the short. All right, so this zone is 69.75 to 69.67. Go to the crude. 69.67. Terra's got to be elevated now in here. 26.269, almost 27 now. All right, so to make this a long setup, it needs to touch 70.02. There you go. So that's another long setup. So I can't go short this setup either. And I'll go long. Wow, The YouTube's really delayed. Holy crap! I'm watching the stream. It's way delayed. You guys are going to hear that until it's live, so it doesn't really matter. But anyway, I'll go along that if that happens. So keep an eye on that. Let's put an alert there if that retests. Left click, notifications, enable notifications. There you go. All right, let's get to the other questions here. Could you talk about the way you use ATR? Ashkay, I've been talking about the way I use ATR this entire webinar. I use it to judge the volatility, and we judge it how it reacts out of these zones. If it's able to push an ATR, a 5-minute ATR outside the volume event, then it shows me that the volume event is bullish, like this one. And then I'll wait for a retest, and then I'll get in once it clears an ATR. But that's all we've been talking about this whole webinar. If you haven't seen it, then there will be a webinar replay. Just go to Bookmap YouTube, and you can see it'll be posted shortly. Caitlin Phillips, internal volumes currently spiking both S&P and Q. Yes, we talked about the relative volume was, well, I didn't see that in Q, and Q was not spiking relative volume wise. Not as much as ES anyway. It's elevated, but it's not crazy. Hey, they're still buying crude. That's trading like something's out. That's what it's trading like. Anyway, there was a, there was elevated here that we talked about. But this is just basically back to normal here. There was a little bit there at the same time here, but I'm not seeing anything in NQ as far as what I look at as far as relative volume or elevated volume. Speaking of which, let's see if we have new lugs here. That was actually going to be a slug trade too, but I didn't take that. I didn't even see this, but I wouldn't have taken it. Let's see if we have new lugs. Yep, new lugs. So that's bullish in itself, right? So not only do we use these lugs as support and resistance areas, which they're absolutely crazy incredible, when you form new lugs, see this formed, as long as the market could hold the new directional yellow prior red, you expect blue. Well, that happened right away. Same thing here. Form new lugs, if it holds prior directional yellow, directional yellow prior red, you expect blue. Well, that looks like it's going straight there. It may come back, but you expect that. If this now comes back and fails this area, then you expect, did I say blue? You expect red. If it fails that area, then you expect blue. This is how you can come up with a thesis just based on the lugs. And then you add this stuff to your thesis market profile, and then your structured stuff, and then you have yourself a very good, educated guess, I'm doing air quotes, on what's going to happen. I still don't just trade based on my guess or feeling. I wait for my volume events and my rules. This thing's going nuts. Futures anyway. All right, let's see what else. Any other questions? Throw them in, guys. So I hop off here. I'm gonna hop off pretty soon. And guys, so back to that. I was reading the Captain Price. Can't risk my own account on that, so don't think about the prop stuff. This is just like having a trading firm back you. You'll be amazed at how clear your mind is if you're not worried about, losing your car payment and your mortgage and having your wife pummel you, right? You would be amazed. So this is just like trading for a trading firm. That's why I took off. Do you think if I was trading on my own, I would have become a multi-million-dollar trader? No. If I lost, yeah, it hurt. Yeah, it cost me money. It doesn't cost me money right then. Like I said, when my first day trading ever, I lost $2,500 trading one lot, which is almost impossible to do, by the way, scalping. I was about to get fired. You guys all know that story. But anyway, it wasn't $2,500 out of my pocket. Not that I was trying to lose it, and it definitely is out of my pocket as I make money, but I didn't have to fork over $2,500. So the point is, if you're trading with this, even when you go live with these accounts, yeah, if you blow them out, like last week I blew out an account, it sucks, it hurts, but it's not like devastating. It's like, oh my God, what am I going to do? Like, what am I going to tell my wife? Hey, we got to move to a cardboard box, right? So it's like having a trading firm back you is what it is. All right. That was a bounce off your zone. Yeah, which zone? It didn't bounce off any zone. It went right through it, actually. And that's information itself. Like we talk about blowing through Ludwig levels, this is the same kind of information, right? When markets blow right through these Izzy zones, that's telling you something's up if it doesn't pause. This one could try to pause, but it still was pretty much sure. So this is the next zone up. This is the next important zone. This is, sorry for the color, hold on. You got this gap down, and this is basically the high volume node of this balance area. So we get up, and it's actually a little higher than that, but I would take a aggressive short there too. So we'll see. All right, any other questions? Throw them in, guys. Otherwise, let's just see what's going on here. Quickly, what I just show you guys some examples. This was pre-market. I took this NG short. I think I might have stopped out of the rest of it. This was pre-market. This was the number, obviously, but this was pre-market here. Just to give you guys information. So I took the barf trade here. You rarely see this kind of size, especially pre-market. 328 by ICE, NG. And this is another example why you're doing yourself a disservice if you're just staring at ES all day. These work in every futures market if you know the thresholds. It's the same patterns over and over. ATR, retest, failure. I got short. Held it to the blue lug. I had this volume event first, so I trailed my stop. Remember when we talked about trailing stops? So my stop was up here. I moved it to this volume event. I got out of one at the blue lug, and I'll show you that at the time. And I held one because it was kind of just sitting there, and then it didn't matter because it came back and stopped out. So this was, I got to refresh these lugs, but this was at the time. So I got short. It was probably, I think it was a 40 tick winner. So the setup was up here. I got out when I got there, did bounce, and then got lower. But then that volume event came, and I trailed my stop to that, and it popped above there, and I got stopped out. But it was still a very nice trade. Stopped out for a profit. So let's refresh these lugs. See what they look like now. So this is a good example, thesis-wise, for natural gas. Right? We talk about all the other theses. You can use them with lugs. Watch the webinar I did with her. It's all over this room. It's in my trade room too. So this should hold directional yellow, prior blue. If you're going to expect that. If it violates these two and gets higher, then you expect that. That's how you can come up with thesis with the lugs. These things are incredible, guys. I keep telling you. Try them out. She's got a 3-day trial. You don't have to put any money down. You will see for yourself. All right. I use indicator footprint still. Footprint is not the end all be all anywhere near it. It's good to use in important areas, but not. Trust me, I tried trading with. That's why I got knocked out of the business, and that's why MarketDelta.com is no longer in business, because the footprint is not. It's helpful, obviously, because it's volume. Anything with volume is helpful, but it's not. It's not like distinct things like you get with these SI events. And trust me, I've seen it all. Captain Price, you were, sir, did you have a lot of caffeine today or something? What in the... How do you have time to trade with all these texts? All right, so I guess it's just Captain Price texting in there with himself. So you guys any other questions? The last chance to ask. Otherwise, I'm waiting for a retest of this zone for ES to go long. I think I missed a trade in here. I missed a setup in here earlier. I just lost track of NASDAQ here. I think there was a stop run right about here. Yeah, so this is barely threshold. But you can see, I'm not going to draw this right now, but that's what it did. That's what it always does, feels like. There's your zone. There's your move away. Here's your retest. Failure. So I would have been long, and I missed this trade, right? This is what happens. You got to be, I'm watching so many markets, but, I missed this trade. This was its threshold, 150. There's your stop run. There's your ATR. It moved back, retested the top of the zone, moved away.
Gold stops stopped by GC. 283 contracts.
All right. Something in gold. I'm not going to draw the zone because I got to hop off here, but let's just see where we're at. This is an Izzy zone. I will short this aggressively. If this, you can see we're right in this important zone. This is right where this market ripped. That's what you call directional conviction. You rip through it. First retest back. I'd still short that. I still will short it. So I'll do the same thing I've been doing this entire webinar. I'll draw the zone, put my prices in my spreadsheet. If it breaks down below here, this is the volume event right here. We didn't really get into Market Pulse today, but we talk about it a lot in my room. The room's got a lot of value, guys. I'm not just pushing it because it's my room. Like, there's a lot of stuff we're doing in there. A lot of capable traders. So you can see this. This is part of the stop run, but here's a perfect example where there was this a stop run too? Let's see. No, this was a stop run too. But sometimes you'll get these spikes, which are really important without stop runs. All right, but anyway, I'll draw that zone and trade it to the short side. Other than that, no webinar next week. I'm going to be out of town, so I will be back the following Thursday. Again, I do this twice a day in my trade room, morning and afternoon. So I do this exact thing in my trade room. If you want to come and learn, what really moves markets. All right, I'm still waiting for a retest of the zone here in crude. I just want to see if it got through this busy zone here. Yeah, it's well through this. So this is the next easy zone up, and this is where this directional conviction starts. So this would be a great short. Multiple reasons. One, balanced area, low directional conviction, and this would be a straight move into the zone. That would be a great short if I get the volume event and it fails. 71.24. So it's a zone. It's not exact prices. It's right in this area. And by the way, I give these zones every day to my trading room as well for 17 different products. So you know you don't even have to draw them yourself. That's what a great guy I am. All right, guys. Have a great weekend. I'll see you a week from Thursday. Thank you.